my friends, and welcome on our market commentary. I will show you what is happening right now and how to trade it, how to trade the current market movements. Before this, well, of course, if you plan to trade in a particular day, you need to know what is happening. And I'm not talking about like the whole geopolitical situation, but you need to know what is happening in the macro calendar. You can see that in 1 hour and a half we're gonna find out GDP, gross domestic product from Eurozone. It can be an influential data for Euro, of course. 2:30 Central European time, we do have data from Canada. You can see exports, imports. It is not really important, but it can have influence on the Canadian dollar. And that would be it, actually. Of course, we also do have a speech from the governor of Reserve Bank of Australia. And this will be influential, of course, for the Australian dollar. If you're planning to open a position for not only for 1 day, but you plan to keep this position open for a few days, it would be wise, of course, to check the calendar for Wednesday and Thursday. So on Wednesday, you can see that we just have CPI from China. Of course, you won't be trading Chinese yuan, but it may influence the general sentiment on the market. But of course, we know that the main factor which influences the sentiment right now is Russian aggression on Ukraine and ongoing war. As for Thursday, at least the first part of Thursday, you can see that not much is happening. We can set the whole week here, and let's also check the whole Thursday. You can see that we have, of course, interest rate decision from ECB and CPI from United States. So definitely, like from the macro point of view, Thursday will be super important, and also Friday as well. We do have a job data from Canada. So quite a busy calendar. It gets better at the end of the week. Now pretty quiet, but at the end of the week it's gonna get interesting. And now let me show you the platform. This is of course favorite MetaTrader 4, our live account on Axiory. Of course, you can see that I have some positions open. They are opened by a trading robot. So they are opened by algorithm, of course, but they are not opened by my price action point of view, by my manual trading strategy. Okay, so with some of them I may disagree, but in general those algorithms make money over a long period of time. But they are based on different algorithms, and they are not based on the price action itself. And in my manual trading, I do follow price action. Anyways, I will explain those trades later. What I would like to start with is S&P 500. You can see that this is daily chart. Yesterday, terrible session. S&P 500 managed to break the neckline of this big head and shoulder pattern. So left shoulder, head and right shoulder. We broke this neckline. Price went significantly lower, but today the day starts, the European session starts with a nice upswing, with a nice reversal. At some point this is a hammer. Of course, we are seeing that the bullish body here is much bigger than usually in the hammer. But think about this hammer, this candle so far. Think about this from the price action point of view. So how would hammer look like? Maybe let me draw it on the platform. So hammer would have a small body, right? And hammer would have a long tail. Okay, like this. And you can see that that would be a proper hammer, right? And what is happening now is that price is advancing higher, making the body like this. What does it mean? You cannot say that it's not a hammer and it's not a buy signal. It's even better than a hammer, right? Because the closing price is even higher, so the bounce is even more spectacular. The bounce is even better than one could expect after a small hammer. All right, so it's this kind of candlestick is even better than the hammer. But of course, in order to trade the daily candle, we need to wait for this candle to close, because at some point this was a very bearish candle, price was here, and one could think like it's a great selling opportunity, but then the price reversed. So that's a hint, that's a tip for you, that if you want to trade a daily candle, it would be wise to wait for this candle to close, because maybe not till midnight, but around, I don't know, 10 p.m. When the market closes in United States. After that time, candle is almost formed, and what will happen in the next 1 hour does not really matter. So, long story short, my friends, Tuesday brings us very small reversal on indices. Let's see if this reversal will be sustainable. Definitely the buy signal will be restored when the price will climb back above this resistance, or even above the upper line of the flag. When the price will close the day above the upper line of the flag, that will be an amazing buy signal. Let's check if Nasdaq is also having this positive situation here. You can see that Nasdaq was really defending the neckline for a long time, and then eventually yesterday they failed to defend this line, and the price went lower. So there is also a risk, my friends, that when you have a head and shoulder pattern, left shoulder, head and right shoulder, and then you have a neckline, and this neckline is broken, very often after the breakout of the neckline we do have a reversal, and this broken neckline is tested as a resistance. Alright, so this may not be like a major reversal, but just a correction, right? The same as with S&P 500, we have a broken neckline. This can be just a small correction aiming the resistance, and then further drop. So the real battle will happen on the neckline here, and on the neckline here. If we're gonna see a bounce of the red neckline, we're gonna have a proper sell signal, and the buy signal will be created only when the price will break the green horizontal resistance on Nasdaq. The thing with indices is that the closer you are to the war, the worse the worse your index is. Like Americans were doing pretty good, right? But DAX recorded super low, new lows for this year. We are lower than in whole 2021. But on DAX we also can see the signs of a reversal. This is a daily chart. This is a kind of a hammer candlestick. Once the price will come back above 38.2, or even this horizontal resistance here, that will be a buy signal actually. Price climbing above 13,400 points, and that will be a buy signal. Euro dollar made the plan minimum, and the plan minimum, the closest target was the lower line of the symmetric triangle on a weekly chart, and that was reached yesterday. And since that, we do have a small reversal, which is so far a hammer on a weekly chart. Again, a hammer. Now, of course, it's Tuesday, so it's too early to claim a victory on the weekly chart, but it's good for a start. So with this, I mean, that was a hell of a ride here, of a bearish slide. But this candle and the fact that we reached the support may be a good indication for buyers. The thing is that you're going against, if you buy here, that's going against the trend. It's very risky, but the risk to reward ratio is great, right? Because I'm not saying that you have to buy, of course, because we are not giving recommendations here, but let's say that you open your long position here. Stop loss usually should be below the tail of the hammer. And look, buying here, this is 130 pips of the profit. If you're buying here, I think like we may at least aim for 38.2, so that would be a target. You can see that the price spent here some time. So we have 130 pips stop loss, and the potential target is 400 pips, which makes it a great risk to reward ratio. Let's move on. Cable, British pound, American dollar broke 38.2, and this is negative. This is a sell signal. So the situation on euro to British pound reversed, and I will show you why it's important. But first, New Zealand dollar to American dollar. I was writing a piece about this yesterday, that really we have new reserve currencies, Australian dollar and New Zealand dollar, which were behaving great. In case of New Zealand dollar to American dollar, from the technical point of view, why is it happening? There is an upswing, there was a correction, breakout of the 38.2, which was a false breakout, and the price came back above 38.2. That is a false breakout. False breakouts are usually amazing signals in the opposite direction, and that's why we had an upswing. Coming back to euro to British pound, why it's important? It is super important. Look at this is a weekly chart again. You can see this horizontal support on 0.83, and it was major support at the beginning of this year, then 2020, 2019, 2017, 2016, absolutely crucial support. And what is happening right now? False breakout. Price is climbing back above this support, and that is a false breakout. And we all know what's happening after false breakouts. After false breakouts, we have amazing signals in the opposite direction. So with this false breakout, we do have a proper buy signal, and why not? Why shouldn't we trade it? Let's open a trade. It's done. Long position on euro to British pound. On a weekly chart, you can also see it's pretty good risk to reward ratio here. Stop loss is pretty far. I'm gonna bring it higher if the upswing will continue. We'll see. Now let's move on. British pound to Japanese yen, going lower. Here you can see this is algorithm. This is a position opened by the algorithm. This is pretty good one. Actually, I can protect it with a stop loss order here. Yes. The aim for this trade is the horizontal orange support. Most probably the price will get there. Then I will think about maybe closing this trade. Australian dollar to Swiss franc. This is what I wanted to show you also. Look at this. This is a weekly chart as well. 1, 2, 3, 4, 5, 6 weeks when the price is making a higher high and higher low. Because this week does not look encouraging because that's a shooting star. Nevertheless, the price is making higher high and higher low still, which shows an uptrend. And this uptrend is against the safe haven currency, which is Swiss franc. So Australian dollar is stronger than Swiss franc during the war. I explained this on yesterday's analysis and yesterday's piece. So there are two reasons, in my opinion. Well, first of all, the prices of commodities are going through the roof, and Australia is, of course, is producing commodities. Australian dollar is a commodity currency, but also it's this fact that the further you are from the war, the better your assets behave. Like American index is better than Europeans, than DAX, for example. British pound was behaving better than euro. Now you can see a reversal, but that was the case. Polish currency is, for example, destroyed pretty much, not as ruble, but yes, the closer you are to this war, the worse your stock market and your currency behave. And Australia is, as we know, is pretty far. About the commodities, yes, let's take a look on commodities and silver. Silver just made new long-term high. This is also this is H1 chart. It's not a weekly chart. It's now H4. You can see that the price is. This is a weekly chart. The price is on yearly highs, and we are aiming to long-term highs here around $28, $29 per ounce. Most probably we're gonna get there. Gold of course is also doing really great. Look at that, $2,000 per ounce checked. New milestone for gold. Horizontal resistance is here. Well, textbook movement, right? This is safe haven, so the price is climbing higher. And another metal, platinum, which is also advancing higher. We are on the highest level since that will be June 2021. And the hero of the recent price movements, oil, at some point $140 for the barrel. Ridiculous. You probably see it on the petrol station. But of course, people are complaining, but it's just the price that we have to pay. We have to pay it anyway. It's the price of resigning from the commodities from the aggressor, from Russia. And we're gonna be fine, of course. We're gonna be fine. It's the price that we have to pay, and we're gonna pay it. Some people in the world, in Ukraine, are paying much bigger price for what is happening right now. So let's not complain about the higher oil prices. American dollar to Swiss franc. We are on inside of the symmetric triangle pattern. This is absolutely the worst place to trade, because price can go up or down. We just wait for the breakout of the upper line, buy signal, breakout of the lower line, sell signal. And last but not least, I would like to show you two safe havens: Swiss franc, Japanese yen. This instrument is creating head and shoulder pattern, left shoulder, head and right shoulder. We are precisely on the neckline. Breakout of the lower line, breakout of this lower line, that will be an amazing sell signal, with the potential target on this horizontal support 1 to 2.5. That's a target in case of breakout, of course, because so far we don't have a sell signal, but price breaking the red line will bring us a sell signal. Guys, thanks very much for watching this market commentary. I hope you enjoy this and it will be helpful in your trading. Thanks very much and goodbye.